welcome to Commerce Academy. In previous lecture, we discussed what is journal, types of journal entry, types of transaction, and how to record a journal entry in journal. And after this, we see what is ledger and format of ledger and how to post a transaction from journal to ledger. So the topic is very important topic. We are going to discuss adjusting entry. So the topic, each and every point is very important. So the lecture, attend most carefully and don't skip any point of the lecture, because if you skip any point you may be feel hesitation or confusion to understand the topic. So give full attention, so that you get a full lesson and full advantage from the lecture. So let's start now. Adjusting entry. What is adjusting entry? Adjusting entries are journal entries that are recorded at the end of accounting period to adjust income and expense account. Adjusting entry are prepared at the end of accounting period to adjust income and expense account. The main purpose of adjusting entry. The purpose of adjusting entry to match the income and expense with appropriate accounting period. Adjusting entry are prepared to match the income and expense with appropriate accounting period. Next, importance of adjusting entry. To update financial statement. Adjusting entries are prepared to update the financial statement, because due to adjusting entry you record only income and expense related to that period. To exact revenue, to ensure exact revenue, because adjusting entry are recorded only relevant income of the relevant period and excluded income of the next period. So we determine exact revenue of that period through the adjusting entry. So let's rectify any error. Adjusting entries or rectify any error when we record a journal entry. So through adjusting entry, if any error in entry, we can be rectified through the adjusting entry. Ensure exact expense. And in journal entry we record expense, prepaid expense, outstanding expense. Through the adjusting entry we record only expense of that period which we calculate income and expense. So adjusting entries are help to ensure the exact expense of that period. So adjust the repayment and adjust the prepayment and due payment. Through adjusting entries, prepaid payment and outstanding payment, payable payment are adjusted through the adjusting entries. So that is the importance of adjusting entries. So next, types of adjusting entries. First, prepaid expense. Prepaid expense are that expense which we paid in advance. Means we paid a rent for 6 months in advance. That is our prepaid rent. Advance rent, prepaid rent is other name of prepaid rent. Prepaid rent is mean payment in advance, but advantage are not gets for of that rent. Next, outstanding expense. Outstanding expense are that expense that are incurred but not paid. Means expense is payable. Means expense are incurred but we not paid until, so it's an outstanding expense. Unearned income. Unearned income means that income which we receive but not earn is called unearned income. For example, tuition we gets a fee from a student for the in advance in the beginning of month and service is not provided, so that is our unearned income. Is at the end of month we provide full services of that month, then this unearned income convert into the earned income. So next, receivable income. Receivable income or that income that we earn but not receive. That is called unreceivable income or accrued income. Means that income which we earn but not receive is called receivable income. Depreciation. Depreciation is a charge on the fixed assets of a business that well life is a more than 1 year. The fixed assets include land, depreciation not charged on the land, but other all assets like building, furniture, vehicle, building, that is our fixed asset. That depreciation charged on according to the life of the assets. So the in adjusting entry, you record only the depreciation of the relevant period. So that is the and types of adjusting entry. So next, how to make a adjusting entry. Now we discuss how to make a adjusting entry with a example. So these are the types of adjusting entry. We make these entries. How make these entries? So now we record how to make a adjusting entry. How to make we draw a format of journal. So that is next how to make a adjusting entry. So date column, description, ledger folio, debit and credit column. So example, we saw the example. We make adjusting entry with the example. Company make adjusting entry on monthly basis. In this example, the company make adjusting entry on monthly basis. So Moon company paid building 24 Moon company paid building 24 as advance rent of building to Ali for 1 year. In this transaction, say Moon and company paid 24,000 rent as advance to Mr. Ali for 1 month. And so adjusting entry pass on the monthly basis. So when he paid the rent, then we record the entry. This is a entry of prepaid expense. So prepaid rent debit and cash credit 24,000. on 1st January 2020. For example, that is prepaid rent. Prepaid rent. So now company was adjusting entry at the end of every month. So now at the end of January, company was adjusting entry of prepaid rent is because company paid 24,000 rent for a full of the year. So company was adjusting entry on monthly basis. So 24,000 rent is a 24,000 rent is our 12 months. So 1 month rent barabar is equal to 2,000. So 2,000 rent for a January. So adjusting entry of this rent expense debit prepaid prepaid rent is credit with amount of 2,000. That expense for the January month. So now our prepaid rent amount is 22,000 remain. So 2,000 expense for the January. So next, that is an entry of prepaid expense. Next, Ali received 2,000 in advance. At the end of month, he only provides 5,000 services. That is an entry of unearned income. Means Mr. Ali received income from Mr. Red 20,000, but he provides service only 5,000 at the end of month. So when he received, so then he passed entry on 1st January 2020. He received income advance. When he received then cash earned on income or revenue. So that amount is our 20,000. Receive income in advance. Means unearned income entry is cash. When we receive cash increase, so cash debit. So unearned income is our liability, so it's a credit. So at the end of month, he adjust make adjusting entry of this. He provides service only 5,000 at the end of month. So he passed adjusting entry of this. Earn he earned 5,000, which of 20,000. So make the entry is unearned because his liability is reduced unearned income to revenue. Now convert in income. So now is 5,000 5,000. That is an adjusting entry of unearned revenue. So first we make cost entry of prepaid expense, then we make an entry of unearned revenue, yeah, advance received income, that is an adjusting entry of it. So next entry is Moon company paid salary to employee every month of the fifth day. At the end of January, company payable salary is 10,000. Means company paid a salary to employee on every month of the fifth day of every month. So company close make a distinct entry at the end of each month. So at the end of January, company payable salary is 10,000. So because this salary is paid in February 5 So adjusting entry of at the end of the leave. So salary is not paid, so salary is payable. Payable expense are our liability. So make adjusting entry of this. Salary debit. Salary is an our expense. Amount is 10,000, and salary payable because payable is an our liability, so it's correct. Salary payable is credit with amount of. Salary payable means that salary which are not paid to employee during a month. This salary is payable because this salary is incurred but not paid. So that is our outstanding expense or payable expense. This adjusting entry pass on 31st January 2020. So that is adjusting entry of outstanding expense. So this is adjusting entry of prepaid rent. This is an adjusting entry of unearned revenue. This is an adjusting entry of outstanding expense. So next, Mr. Ali provides services value to 20,000 to Anwar. During the month of January, Mr. Ali billed next month. So this is an entry of receivable income. Mr. Ali provides services to Mr. Anwar 20,000. But Mr. Ali billed the in the next month. So provides services are provided but income received in next month. So this is our receivable income. So at the end of month we passed adjusting entry of this. Services are provided but income not received, that is an receivable income. Um, receivable count is debit and client account credit. Account receivable, that is our asset when we receive income, so that convert into cash, and client account that we receive income from that person, so it's a credit, it's our creditor. So client receivable account is debit, we payable income to us, and client that is our income, so we credit. So when we receive income, so our cash debit and receivable that person our pay, so that is credit. So that is an adjusting entry of receivable income. So adjusting entry depreciation depreciation entries are depreciation expense. Depreciation amount debit 5,000. Accumulated depreciation. Accumulated depreciation expense. Accumulated depreciation. Accumulated depreciation is whole combination depreciation. So depreciation expense which we charge only depreciation for the current period. So we depreciation expense debit and accumulated depreciation credit. So this is an adjusting entry we discussed with the example. In this way you can make a adjusting entry of prepaid expense, unearned income, outstanding expense, receivable income, and depreciation. So in today's lecture we discuss What is adjusting entry? Adjusting entries are journal entries that are prepared at the end of accounting period to adjust the income and expense account. The purpose of adjusting entry is to record income and expense in appropriate accounting period. So then we discuss importance of adjusting entries to ensure the exact revenue of to ensure the exact expenses, to update the financial statement, and to adjust the prepayment and due payment. And so is an important of adjusting entry. So after this we discuss types of adjusting entries. Type of adjusting entries include prepaid rent, outstanding expenses, unearned income, receivable income, and depreciation. So next we discuss how to make a adjusting entry, how to make a adjusting entry discuss with the example. So if you have any question regarding today lecture, you can be asked in a comments, and if you have lecture need a lecture on any topic, you can also mention in a comment or contact on a WhatsApp. And so keep in touch for more updates, more lectures, and you have any question regarding today lecture, you can be contact with me through WhatsApp or by command. So thank you and goodbye.